Hey there, welcome, and thanks for checking out my video. My name is Gene Bordis, and I'm a tax professional. I've been doing taxes for well over 15 years, and the reason I've created this channel is to help taxpayers across the nation understand taxes a little bit better, especially as it relates to their tax situation. So what I've found is that a lot of folks still don't understand how taxes work. Whether they're new and just entering the workforce, maybe they're in their teens, or maybe they're more advanced in their career and have had multiple jobs. I find that a lot of them don't understand how to keep more money in their pockets, or even understand how they're being taxed. For example, a friend of mine just last week, and I get asked this often, but last week he said, "Hey, Gene, I think I'm being taxed at about 28%. And I said, "How'd you come up with that number?" He says, "Well, I went on ADP, which is who their company uses as a payroll company, and said, looks like about 28% when I look at the line." So he pulled up his phone, showed me the line, and indeed it said 28%. And I said, "Cool, but do you know that's not only federal, but that's also FICA, so that's Medicare and Social Security as well." He said, "Oh, I didn't know." So I said, "When we're talking taxes, usually we talk about federal, but yeah, that number is accurate. But Social Security and Medicare, you can't really control that part. When it comes to federal, you can control that." And so I said, "It'd be nice to know how much your federal tax rate actually is." And he's like, "I don't even know how to start or how to figure it out." So hence creating this video. Now, I did create episode 1. This is episode 3. If you have not seen episode 1, I suggest and I recommend that you watch that. Why? Because in that video, I shared what I believe, in my opinion, is the most important line on your tax return. Most folks go to refund amount or tax due, but it only tells you some of the story. Spoiler alert, total tax is the line that I said, line 24, is the most important. Why? Because it tells you how much of your money, how much of my money the IRS is actually keeping. And then from there, we can kind of work backwards and look at the whole and the big picture. So in today's video, I want to share how total tax is actually calculated so that you know how they get to that number. So what I'd like to do right now is go to the IRS website and let's take a look at the 2023 tax brackets and see if we can make sense of it all. All right, so what I did was I went to the IRS website. I went to irs.gov, and in the search bar, I typed federal income tax brackets, and this came up. Now here, this is going to show us what the tax brackets are, and it's going to be based on your filing status. So here you're going to see single taxpayer. If you scroll down, you're going to see married filing jointly or qualifying surviving spouse, married filing separately, or head of household. So you're going to have those different filing statuses. And let me just plug this in here. If you're not familiar with filing statuses, now remember I said this course is for beginners or folks who know absolutely nothing about taxes. If you're not familiar at all, I created a free resource for you. The link is in the description. You can just click on that link and it will take you to a course that I created. And again, there is no charge for it at all. I've created it where it's easy for folks to understand. I will keep making updates, and it is free for now. If you sign up, you will be grandfathered in if it ever becomes paid, and you will never be charged for the course. So I'd recommend that you click on the link in the description and check that out. It's about 3 hours worth of video in bite-sized, like couple-minute video, 5-minute videos. Go at your own pace. I've had folks do it in 24 hours, but you should definitely be able to do it all in about a week. So here you're going to see for 2023, the tax rates are as follows. So from $0, so for your first dollar that you actually make up to $11,000, you're going to be taxed at 10%. So this is a progressive tax rate. From $11,000 and a dollar up to $44,000, all of that income that falls in between is going to be 12%, taxed at 12%, and so on and so forth. So from $44,726 and up, again, this is for tax year 2023, it will be taxed at 22%. And when I say and up, I mean $44,726 to $95,375. So which means that, let's say you made, actually, let's follow this example here. If you made $58,000 for the year, here's how it works. So your first $11,000 is going to be taxed at 10%. That's it. And then everything from 11,000 to 44,725 is going to be taxed at 12%. And then everything up to remaining up to the 58. And the reason it stops at 58 is because, again, from 44 to 95, it's 22%. So in this situation, since the taxpayer made 58,000, it's going to stop at 58. So it's going to be taxed at 22%, which means that if you're a taxpayer and you make $50,000, or you're a taxpayer and you make $100,000, let's say we have both of them side by side, they're going to be taxed exactly the same up to $50,000. The difference is from $50,000 and up to 95,000, he will be taxed, or she will be taxed at 22%. But up to that 100,000, the difference there, that 4,000 and change from 95 to 100,000, that will be taxed at 24% instead of 22%. So I hope this makes sense. Not a lot of people know this. So a lot of folks are like, I'm getting taxed at 28%. Well, let me take a moment here and share. There's a difference between a marginal tax rate and a effective tax rate. So marginal tax rate, and I don't want to get too much into the weeds here, right? But it's important that you know these two terms. If you take nothing else, take this: marginal tax rate and effective tax rate. Marginal tax rate, it just means your last dollar, what tax bracket it falls into. So, for instance, if you made $58,000 here, your marginal tax rate would be 22%. Why? Because your last dollar that you earned, your last dollar of your taxable income, fell into 22% tax bracket. So that would be your marginal tax rate. Your effective tax rate would simply be, we take your total tax that is due to the IRS, and then we would look at your total income, and we would figure out what percentage of your income is the actual tax, and that would be your effective tax rate. Which means you may have a marginal tax rate that's 22, and an effective tax rate that is somewhere like 14%, whatever it may be. So there's a difference. So when somebody says, "Hey, what's your tax rate?" Be sure that you guys are on the same page, marginal or effective. Hopefully that made sense. If not, feel free to watch it again. But we're going to dig deeper as future videos come. So now what I would like to do is kind of share a little bit about credits and adjustments, how those affect your tax, your total tax. And I want to go back to the software for that. So let's go back to the software. Okay, so I opened up my tax software and I made up some information. So made up an address, made up a social, put my name. Here I put that this individual made $60,000 for the year, and didn't put much for adjustments. So I just put $300 here for a educator expense. Put that this person is a teacher and qualified for the full 300. Head of household filing status, and you can see here the taxable income is $38,000. On that taxable income, the total tax is $4,000. And the tax, is $4,000, and the total tax on this return right now is $23.57. Now, if most of these numbers don't make sense to you, it's okay. I wanted to make sure that I kind of shared those numbers as I made my way down, but I will be digging deeper and breaking down those numbers in future videos. So I would encourage you to kind of stick around. Great time to, if you find this valuable, to like and subscribe, because I would like you to be notified with future videos. And my goal right now is to drop a new video, one video a week. And then we're going to be kind of working backwards from total tax, and so that you can understand and see the big picture and see how it all works together. So here we're at total tax. I said that is the most important line. We figured out how your tax, right? You've got tax brackets, and it depends on, again, your taxable income. Because although you made $60,000 for the year, after deductions, only $38,900 in this situation is taxable. So your tax is based on that amount, taxable income, hence the name. So the tax on that is $4,357. How did they come up with that? Well, as you know, it wasn't just a 10% or 12% or so on and so forth. It was based on your income, and it was progressive. So then you can see, after we figured out what the tax was on the taxable income, you can see now that there were some other dollar amounts and then a total tax, which is, this is the total tax, which is what the IRS is going to keep of your money. So now what I want to do is kind of talk about the difference between credits and adjustments. Let's do this real quick. So adjustments, what they do is they reduce your income. So they just adjust your income. So for instance, if you take a look here, $60,000 is what this taxpayer made. And there was a $300 adjustment for an educator expense, which reduced the income from $60,000 to $59,700. So that was a reduction of the income. The standard deduction right there is a deduction of that income. So it took $20,800 out of the $59,700, and you're left with $38,900, and that becomes your taxable income. So therefore, adjustments are great because they lower your income. So it lowers your taxable income. So not all of your money is taxed, so that you're taxed on what's left, which is your taxable income. So the second thing is credits. Now, once you have your taxable income, they determine what your tax is on that income. So your tax here is $4,357. So credits, what they do is, now that you have your tax bill, credits are kind of like payments towards your tax bill, if you will, right? So if I have a $2,000 child tax credit here, that $2,000 child tax credit gets applied to my tax dollar for dollar, and it reduces my total tax down from $4,357, take away the $2,000, it's now $2,357. So that's huge. So that $2,000 went a long way, versus if that $2,000 was an adjustment, then it would have taken the $60,000, taken out $2,000, and we would have been left with $58,000, and then subtracted the $300, and so on and so forth. So it would have had less of an impact on our total tax and on our total tax due. All right, so now that we know the difference between adjustments and credits, we know that adjustments lower your income to determine your taxable income, and we know that credits are kind of like payments, if you will, towards your tax liability that then leads to what your total tax ends up being. And we know that your credits are dollar for dollar against your tax liability. So ideally, what you want to know as a taxpayer is, what adjustments do I qualify for that I can take legally? And also, what credits can I take? So it's very important that you don't just leave it up to your tax preparer, that you also know, so you can bring certain things up to your tax preparer, because they are not with you throughout the year and they may not be aware of certain things. They only know what you tell them, which is why I believe it's important for all of us as taxpayers to understand how taxes work, so that we can work with our tax preparers, or if we're filing the taxes on our own, that we can make sure that we claim every deduction, every credit that we possibly can, so that we can get the best outcome every single year. All right, so you've made it this far in the video. Hey, I appreciate you sticking around. I hope that you found this video both insightful and helpful. And if you have not watched episode 1, I would invite you to do so. Why? Because it sets the stage for this video here. Episode 2 is just me sharing a personal story about a friend of mine and kind of some trouble he found himself into, and some advice that I had, and I turned those into lessons that I believe every taxpayer should know. So if you have some time, check out episode 2 as well. Now, if you have questions from this video or any previous videos, I would like for you to put those in the comments. Why? Because I would like to address those questions for you and create content based on your questions. Because again, I'm not creating this channel for me, I'm creating it for you. And lastly, if you have not subscribed and you found this valuable and you would like to join me on this journey, I would welcome you to do so. Now, may tax time never catch you at a bad time. Thanks for watching.